Welcome, ladies and gentlemen, to the C2FO webinar, How to Gain More Liquidity in 2021. Today's session will cover a brief chronological look back at 2020 with key factors that impacted businesses and economy, as well as how to assess what options you have in your toolkit to be best prepared for what 2021 might bring. Because of the number of attendees in this session, your respective microphones have been muted. If you have questions at any time during the course of the event, please use the chat feature located at the bottom of this application window. Our moderators will make the attempt to address your questions as part of the content presentation. And time permitting, they will also address questions that have been submitted towards the end of this event. It is my pleasure to welcome C2FO thought leaders Casey Nolte, Jay Lott, and Megan Sneed to the panel, as well as our moderator, Alex Donnelly, to the session. Alex, the floor is yours.
Hi, everybody. I'm Alex Donnelly. I lead global operations for C2FO. We've assembled an awesome team to chat with you all today, and I want to give them the opportunity to introduce themselves. Casey, I'll hand it over to you first.
Thanks, Alex. I'm Casey Nolte. I am Vice President of Operations for C2FO. My team works with all the businesses across our network, advising them on all the options we have to improve cash flow.
Megan, over to you.
Yeah, so I'm Megan Sneed, Senior Director of Business Development at C2FO, and I support our enterprise trading partners as it relates to our early payment products and working capital strategies, liquidity strategies, etc.
And Jay.
Yeah, Jay Lott. I am the Manager of Sales and Operations for C2FO's Capital Finance Group, where we provide some alternative financing solutions such as asset-based lending and AR finance.
Awesome. So 2020, I think we would all say that we learned some important lessons about adversity and opportunity this year, to put it lightly. We saw disruptions to the global supply chain, and the phrase cash is king was never more true than it was this year. Whether the pandemic caused unexpected revenue loss or led to sudden growth, businesses across all industries faced pressure on cash flow this year. It was dynamic and it was unexpected. Across most industries, at least in our system, within C2FO, we saw a drop of accounts payable on our platform. This continued from about mid-March to early May. And with payables bouncing back more than 22% in October, we're really thankful to be finishing the year right at about pre-lockdown levels. But we're all aware that this could change. Early 2021 could bring, spikes in COVID cases, and we could see those increase and continue to increase worldwide. The only way to really be ready for whatever 2021 brings is to ensure that you have cash on hand for your business. For you all, 2021 may mean settling debts, adding employees, or ramping up inventory and production. Before we talk about 2021 though, I do want to take a look back at 2020. We'll spend a few minutes on each quarter of the year just talking through what we saw within our system and within our customers and through the market behavior that took place. But we'll actually start all the way back in Q4 2019. This will help us set the stage for what we saw in 2020. This was pre-COVID, and Jay, talk us through what were we seeing from our customers at this point in time?
Yeah, I guess it really depends on the customer whom you're speaking with for the most part. Importers, specifically the ones buying from China, for example, began to experience and seeing a shift early on. There were a lot of talks of limited supply of containers in early Q4, which sent some operators into more of a frenzy, depending on what their relationship was like with their suppliers. The individuals I know specifically knew this meant that a good portion of their day-to-day working capital would be dedicated to making larger down payments so that they could load up on more product than usual. And this was in addition to how they generally prepare for Chinese New Year, which is a topic that a lot of people may be privy to. But some recognized ahead of time that, if they did not commit to making those down payments, that their sales would likely suffer due to a lack of inventory and a lack of product.
Yeah, that was really interesting. Wow, thinking back prior to COVID, it seems like a much different world, right? unemployment numbers were at record lows. I mean, prior to December, you saw trade war was probably the biggest concern economically. As that started to kind of ease, where maybe there was a little bit more optimism at the end of the year to a phase one deal, I think inventory started ramping up considerably. You started to see more investment in business.
Makes sense. So moving on to Q1 2020, when COVID started to take hold, I think it was really around February that people started wondering what was going to happen. So when you look at January versus March, there's a stark contrast in the difference that really the world was in at that point in time. Casey, what did you see in this time frame?
Yeah, the businesses we talked to were really fairly optimistic heading into the year. Obviously, as you got further into January, news started to break around coronavirus. China, obviously, by the end of the month, was completely locked down. So when you moved into February, there was real impact to supply chains across the U.S. So that was definitely a major concern. By March, lockdowns had reached Europe and U.S., so things changed dramatically, obviously, as we all remember. Massive layoffs. Really, it just comes down to uncertainty and panic. So large companies move really quickly to start conserving cash. There was definitely, businesses moving into terms extensions, which led, suppliers kind of scrambling. Really, it was just about getting liquidity from any place that you could.
Yeah, definitely. I mean, the period, it was odd, right? So it was January, early February, even into late February. This was like the calm before the storm. The economy was in like a good place. Most people were even killed, depending on who you talk to, obviously. Some business owners were gearing up for their best year yet. People felt prepared. The industries that experienced their busy sales in late spring and summer started to receive their POs. And most people couldn't have imagined what was to come. I know a few small business owners who were, carrying momentum from the previous year. So January and February, there was a lot of excitement. And then we obviously know what transpired.
So moving on to Q2, I think at this point it became really clear that economic recession was on the way. PPP started being distributed, which was great. Businesses were shut down. Most of us, I think, were staying at home and working from home and trying to keep kids out of our Zoom backgrounds. But some of our enterprise markets did a really amazing thing, and they created exclusive offerings for our SMBs in this time frame. Megan, can you talk us through a little bit of the good and bad that you saw in this period?
Yeah, so, you probably heard this saying that in a recession, there are winners and there are losers, right? And we really saw that play out with our suppliers and even our buyers. So, for a lot of our suppliers, it was a really, really challenging time, really difficult, orders drying up, orders being canceled, and they were scrambling, just trying to figure out how they were going to, keep the doors open and keep the lights on and paying their employees. For other suppliers, it's been a record year. They've really benefited from all the toilet paper we bought and stocking our pantries and our freezers and all of our hoarding. Clorox, I think, I read they've had their best year ever, and a lot of our suppliers are experiencing that. So CPG industry, electronics, even furniture, right? Because we all tried sitting at our tables for 3 days and our back started hurting, so we started buying desk chairs. So, some real winners in our supply chain. And then we saw the same thing with our buyers, like you mentioned, Alex. Some of our buyers really, they took a bigger step forward even into programs like C2FO, investing more cash, making sure that their supply chains had access to liquidity, setting up markets exclusively for small businesses or minority and women-owned businesses to make sure that they had access to cash at a reasonable price so that, they could keep their supply chain strong. And then a lot of our buyers struggled as well, right? In other industries, oil and gas or, just a lot of industries that experienced pressure from the downturn where, they went into cash conservation mode. You know, they're trying to keep cash on their balance sheet, and in uncertainty, you know, had to shut down their markets within C2FO, extend payment terms for their suppliers. So we really saw the gamut of that play out within C2FO.
So moving on to Q3 2020, some of the businesses started to open back up. I think some people came back to work, some went back to school, others not. As far as C2FO goes, accounts payable volume was still down, but POs were starting to flow in again. Jay, at this point, how did the companies you work with look to fund production when cash and existing AR coming in may have been lacking?
Yeah, that's a good question. Like, what a time it was. COVID fatigue really started setting in, but like you said, businesses began to open back up pretty rapidly, and they were attempting to make up for lost time, lost sales. So a lot of businesses really began to pivot. One area which a lot of us know about, the restaurant industry should really be proud of themselves, because like them and like many other businesses, again, they had to pivot, but what they did was important. They made a lot of changes in order to prepare and to accommodate and keep their customers safe. But to answer your question, it really, again, depends on the industry. A lot of folks in the retail space, for instance, were getting, again, a ton of POs during this time, causing them to scramble because they didn't know how they could possibly fund all of this business that they were getting. There were also some people who attempted to seek assistance from lenders that they were already in partnership with. But as we know, many lenders took a step back at the beginning of all this and continue to be conservative at this point. Thankfully, the government stepped in early and provided assistance, whether that be through PPP or EIDL loans. But again, this was also a time where, you know, some panic was continuing to set in, and small business owners and operators settled for what they could get, which could have come in forms of merchant cash advances, high cost, or entering into high cost factoring agreements, and even purchase order finance. It got some people into some uncomfortable situations, but ultimately what we know is that people have to do what's best for them. And so there's plenty of options out there. It's just that they had to do their research, and some of them got through their season, and some continue to get through their season.
Yeah, I would echo that. I would say the concern, even up to the large retailers, was I mean, very real. You in Q3, you know, you started to retailers were preparing for the holiday season, so they were getting on a lot of orders.
Yeah.
Trying to figure out like how they're going to stock their shelves, and then you have suppliers that don't have cash flow coming in because they didn't have any production ahead of that. So they were scrambling. I mean, I know many turned to us to provide some special financing options to some of their suppliers. You know, we obviously looked at PO finance as well, as many suppliers did. So it was definitely an interesting challenge, but we saw many get through that, and obviously we're having a pretty good holiday season. So
Yeah, so on to that. Q4 2020, the end. We're finally at the end. Businesses are starting to bounce back. We're seeing that. We have generally on any given night about 60% of US retail that runs through C2FO. Our data began to show us kind of early in Q4 spikes in wholesale apparel and other key industries. But as mentioned, we have seen COVID cases spiking. And I think we all understand that we still, whether we're in the office or not, have year end to take care of. There's also an unprecedented mental fatigue that we all feel, related just to the pace that we've been keeping, and again, having kids at home and just generally being isolated from one another. Casey, how have you seen businesses and customers that you speak with and individuals cope with this?
yeah, this is something I think that we shouldn't underestimate. So I think first internally how it's impacted us. I mean, if you read a lot of the reports, I mean, there's polls that 50% of Americans are reporting mental health impacts from COVID. Everybody, I know that I'm around, they have school-age children, that they're finding themselves now in the position of being teachers. So that's a real challenge, to try to do work and teach your kid during the day. So most are worried that their kids are falling behind in school. So it's a real battle. So I think the first thing we've done internally is really just kind of talk about it, share the challenges, the successes, and what we're all going through, how it's impacted our families and our work lives. I know our leadership talks a lot about how it's affected them personally. I think that means a lot to everyone here. Then it is really focusing on taking some downtime. Many people, as you said, are working more than they ever have. Working
Right.
from home, setting boundaries between work and home, setting time when you're able to recharge. We've even taken the extra step of setting some mandatory time off to allow everybody that time and a little bit of reprieve, something to look forward to.
Yeah, and plan something to do. I think that's the key as well there, because so often I think since there's nowhere to go per se, we just stay home and kind of roll with it.
Yeah.
So Jay, what about consumer spending as it relates to this? What are markets doing from a business standpoint?
A lot of people, it varies, right? A lot of people are getting back out there. Obviously, consumer spending for the holidays, getting the gifts for their loved ones. And quite frankly, I drove past the mall the other day, and it was pretty packed. It looked like we weren't going through anything right now like the pandemic, which kind of goes to the COVID fatigue that we were talking about earlier. Like, people want to get out there, people want to shop, people want to do things that they've done and they've been used to in the past. And obviously online shopping has increased this year. Amazon, a big benefit of that. But at the end of the day, we see what happens. People are reverting back to traditional ways. And, as much as we say brick and mortar is a thing in the past, we see that it's not right now. So, people are getting back to doing what they've done and what they're used to.
Yeah, there's a sense of optimism. And with that optimism, on to brighter days, hopefully. So let's talk about 2021. This is really our focus for our time today. How do we prepare for the future? How do we set our customers up for success and for whatever 2021 may bring? We wouldn't tell anyone, obviously, what to do or how to act within their business, but we can provide resources to help them navigate their specific situations. So, Megan, given this, what are some of the most effective forms of financing in the event customers were to extend payment terms again? Should we see the same thing in 2021?
Yeah, so I think the answer is it depends, right? So there are a ton of options out there, and what's right for your business is really going to depend on a multitude of factors. And you know your business better than we do. But what I think that we can say for certain is that you're going to need sources of funding that give you control and allow you to stay in the driver's seat. And a lot of times, the financing options that many of our suppliers, see or seem like a good idea have a lot of strings attached. They're super cumbersome. They're signing their lives away, and you need something that's going to allow you to stay in control. The second thing is you want something that's flexible and that can pivot with you as your business changes, because we know that your business is going to change.
Right.
The last 12 months are evidence of that, and so you do not want to be pigeonholed into something that's so structured that really hedges you in and keeps you from being able to pivot as things change. We saw so many businesses pivot to completely different, products that were, we had a story even internally of suppliers that were, that were selling alcohol that became, they started making hand sanitizer, right? From a distillery to a hand sanitizing company, because that's what the world needed, right? And so making sure that you have those resources that can pivot with you, because things will change. And as we look into the future, there's still a lot of uncertainty in what this is going to look like. And yes, we have a vaccine and it's amazing. And, we're so thankful that we're moving toward good things, but we don't know what that that really looks like, and I think there's still a lot of uncertainty. And then lastly, I would say the thing that we can also be really confident of is do not wait until you're in the middle of a crisis again to explore your working capital options. Trying to establish financing or liquidity sources when you're desperate is not ideal. And so take the time. If things have settled down for you, if you have your head above water, now is the time to really explore what your options are and do that research and have something in place so that you are ready if, you know, for the future and for the things to come.
Yeah, no, that's really good, Megan. I mean, so this is my time to plug in me being a new father, a proud dad moment. But ultimately, what I'm saying is, like, being a new parent, there's a lot of material out there that, you know, tells you how to raise your child. But as we all know, every baby's different, and that pertains to business as well. There's plenty of alternative products out there, like Megan's saying, that can give cash out. But what is imperative is that you guys, you know, business owners, operators, they do their research ahead of time. Like, always have those 4 to 5 people who you built a relationship with, who you believe you can trust and partner with. It's easier said than done, but it's just not the time to panic. Just as people are out here doing refis for their mortgage during this time, it's important that you just don't take the first offer that comes on the table. This is a time, again, to do your research, observe who is actually listening to your needs, who's providing tailored solutions that align with your business models. This is a time to just simply seek out a real partner. And I can assure anybody, especially me, being a product of a entrepreneur who does this, who's been doing this for 20 plus years, I can assure you that there are lenders out there and alternative providers that are great people, because I know for a fact that we have a network full of them. So, like, honestly, when I'm talking about having those 4 or 5 people that you know, as a business owner or operator, you talk to, you know, from my seat, if there's not a solution that I can provide personally or that C2FO can't provide, I have no problem admitting that, while pointing people into a better direction.
Right.
To me, it's more valuable to do that than trying to fit people into a specific
Yeah,
box. Yeah.
Absolutely. So what about managing cash flow? What are some of the ways you guys recommend forecasting and managing cash through times of volatility? Should we see that again? Casey, what do you think here?
Yeah, that's tough, right? Uncertainty. I think it comes down to the basics. You know, just really being operationally sound. Businesses that stand the test of time are operationally sound, and they do the things that are necessary to keep them solid through these times. So if you take a look at your cash conversion cycle, this is something I think that's really underestimated, of understanding, do you need to make adjustments to your buying patterns or inventory in uncertain times? Are you invoicing promptly, right? Are you looking at your collection process and managing your aging report to make sure you're collecting on time? Offering incentives for your customers to pay you early, looking at, you know, programs to allow you to collect invoices early. What terms are you offering your vendors, and does it allow you enough time to put your cash to work? I think that's important. If your terms, you know, where you're getting paid in 30 days and you're paying out terms in 15 days, that's not going to work. So you need to understand how all that works together, and then look at financing options to help you.
Yeah. I would just say, like, don't commit. And this goes from like a small business owner operator mindset, right? Because in small business world, you know, your word is bond. So if you say you can do something as a small business operator, you need to be able to do it. But if ultimately, you know, you are much more respected, at least that's what I've seen, for not trying to play superhero and just admitting that you can't do anything, like that's the one thing I think a lot of people may be seeing, not only earlier in the year, but right now, is like, simply don't commit, don't put yourself in any type of situation that could ruin your reputation.
Makes sense.
Yeah. One other thing, and kind of just piggybacking on what Casey said, being intimately acquainted with your cash conversion cycle and knowing the ins and outs of that. And I think that's something that we've really seen in the past couple of months, much more attention being paid there and managing that, really closely. And so finding those resources that can help you manage that give you visibility into what's going on with your cash conversion cycle, but you need to be intimately acquainted with that in order to, have a good plan for going forward.
Yeah, and I would offer up our services here, right? So if anybody, even if somebody just wants to get help understanding their cash conversion cycle and how to even begin thinking about that, I think, every person on the line right now will have an assigned individual at C2FO that can walk them through that and help them explore that. So happy to do it. If you guys do have questions, by the way, please feel free to pop them in the chat. We are getting a couple here and there, so we'll address those as they come up or toward the very end. So let's talk a little bit about corporate responsibility, especially as it relates to getting liquidity in the hands of small businesses, minority-owned businesses, women-owned businesses. This really goes all the way from the very beginning, with an enterprise customer acquiring a new supplier and selecting them, and all the way through to the cash conversion cycle that we've just been speaking about. What ideas do you guys have for how we, or really any business, can support these types of small and minority and women-owned businesses? Casey, what do you think?
Yeah, this is one of those topics that we're very passionate about at C2FO. If you go back to why we were founded, it really just this is it. We traditional like bank risk underwriting. We know that it is missing a lot of these businesses, and so small businesses, particularly in the WE businesses, just don't have enough access to capital. Right. So, for me, it starts with being intentional, creating a plan for ESG, more specifically, those small businesses, women, minority-owned businesses, setting specific measurable goals around increasing diversity, both internally in your company and in your supply chain. One thing we've noticed as we've helped businesses in this area is many of these large companies don't have a way to identify them within their supply chain. So we've stepped in to help fill that void in many cases, providing a lot of thought leadership there. And we're working with many, these large companies to provide special financing options at low rates to help these businesses get the capital they need to grow.
Yeah, and to be honest with you, this is a good topic. Sorry, Megan, you have something to say first?
Oh, go ahead.
Okay.
Sorry.
No, it's fine. Okay. So I'm, like Casey, very glad that we work for an organization that really cares about small business, specifically during this time where, minority-owned businesses, women-owned businesses, vet-owned businesses, because we know historically that their ability to access capital is traditionally limited. Like 3 of the things that I can think of off the top of my head that have historically worked against them, and this is what we're trying to improve right now, is like how to eliminate traditional underwriting, like Casey said, and risk. But traditionally, the things that work against those type of businesses have been, credit history, a lack of collateral, and some of them are just cash strapped. We know that small businesses are reliant on outside funding, and a lot of investors don't necessarily put their cash there because they don't want to put their cash where the people that they're investing in don't have a lot of skin already in the game, if that makes sense.
Makes sense.
Yeah. Yeah, and Casey mentioned this, but one of the things that we've seen as a real challenge here is, a lot of the corporates that we work with and facilitate the early payment programs and working capital programs for are very interested in prioritizing, minority and women-owned businesses. The real challenge is, like Casey said, identifying those. So, they know they have those suppliers in their supply chain and they recognize them upon signing a contract, but there's no historical evidence in their ERP of who those suppliers are. And so, we even had that challenge internally as we were trying to identify them as C2FO. And so that's been an area that's a challenge, but I think we'll see some big changes there because this is such an important initiative for so many corporates wanting to identify those types of suppliers and ensure they have access to liquidity, that if, their supply chain is inclusive. So I think that we'll see some real changes there in terms of, how businesses prioritize identifying those types of suppliers.
Makes sense. And going back to cash conversion cycle, we did have a question in the chat just about the time period. Jay, do you want to take that one?
Yeah, I mean, essentially, how I see it is it's the day that you receive an order until the day that you receive cash. So typically, that's how I would look at cash conversion.
Yeah, and many times people may look at this in varying, and they may look at it for the quarter or for the year. And obviously, you want to watch that cash conversion cycle throughout time to see how either it's improving or declining. So you should set goals and then work on those throughout the year and keep your financial reporting, every quarter. Even it doesn't matter that, you're not public. You need to make sure that you're walking through all of that data to understand how your business is improving.
And could you have seasonal impacts to that as well?
Certainly. Yeah. I mean, it's certainly just based on your buying patterns, and there are definitely seasonal factors there. Depends on your business.
Makes sense. So as we look to the next year, we could have another round of PPP funding. We could have other government initiatives that take place. What impact do you guys think the new Treasury and Fed leadership will have on business? Megan, I know you have an econ background here. Where's your head at on this one?
Yeah, so, I don't have a crystal ball, unfortunately. That would be really helpful in life, but I don't have one. I think that, we can really look to the new administration, the Biden administration, and his pick for Treasury Secretary with Janet Yellen to kind of give us an idea about what the future may hold, right? So, like Alex said, I have an econ background, so I'm going to push my pretend glasses up on my nose and get a little bit nerdy for a second. But Janet Yellen has a economic philosophy that's Keynesian philosophy, right? And basically what that means is that she believes that markets are inefficient, and that if the economy is in a recession, that it's the government's responsibility to help stimulate the economy and kind of bring the economy out of a recession. So I think that's very telling. She's inheriting a very shaky economy with everything that's happened with the pandemic. And I think that, just her general philosophy regarding the economy is very telling, that we will probably see the administration taking action to help support businesses, to help revive the economy. It may even be in, reviving some of these lending programs that are supposed to expire at the end of the year. And, who knows? I know there's talks going on right now with, potential stimulus with the current administration. So I think there's a lot up in the air, but I think the other interesting thing about Janet Yellen is that, she's been very blunt and outspoken in her previous roles in the Fed about income inequality. And, she's a strong proponent of increasing the minimum wage. And what we've seen, this year, again, what she's inheriting is really interesting, right? Because the pandemic has disproportionately impacted the American population, and I guess the world, really. We've seen those that are low income earners be more disproportionately negatively impacted by the pandemic, and the ultra rich, adding $1 trillion to their net worth this year. So we're getting a Treasury Secretary that's very outspoken about inequality in light of, in this context where inequality is growing. And so, she's going to be in a position now as Treasury Secretary, if she's confirmed, with more resources, with more power than when she was at the Fed, and more ability at her disposal to influence and have some impact here. So I think just in general, it's likely that we'll see, some continued support for businesses and influence, just given her kind of take on economics.
Yeah, let's step back on PPP, because I'm curious to get your answer on this, Megan. I guess, obviously the government needed to step up here and do something. And I think, there was pretty quick movement on this to try to get liquidity out into businesses that needed it. But I think there was a lot of gaps with PPP. We saw many small businesses, and particularly minority and women-owned businesses, that fell short and didn't get funding that they needed through these programs. And there was controversy around large businesses receiving PPP funds. Do you think there will be changes to the way in which the government approaches another round of stimulus?
Yeah, I mean, I think that, everyone's learned lessons, and the government's not excluded from that, and they were in the same position really as a lot of us were, right? And having to stand something up really fast, not really knowing what was happening. And so, hindsight is 2020. I think that going forward, the Biden administration and Janet Yellen have, the good fortune of now wanting to be prepared and being able to take proactive action in putting together maybe new types of stimulus that are better regulated, that maybe do a better job of identifying, those publicly traded companies that shouldn't have access to this type of liquidity and can get credit elsewhere, and just do a little bit better job. But, I agree. I think there were some challenges, but I think it's always, it's hard to know how everything's going to be extrapolated, right? And to think through all of the aspects of how this could impact, and one of the scenarios that came up a lot was the requirement to use the PPP funding for payroll. 60% of it needed to be used for payroll. And so you had all these businesses that got the PPP, and then when they tried to bring their workforce back, a lot of them didn't want to come back to work, right? They were concerned for their health, they were sick, they didn't want to come back to work, and they were getting unemployment benefits. And so now you have these businesses that have this money, and for it to be forgiven, they need to use it on payroll, and they're in a bind because they can't get workers. So, working out some of those kinks and hurdles, again, now we have the ability to anticipate the likelihood of needing stuff like that, and putting programs in place that maybe are more efficient and make more sense in the long run.
And Casey, one of the things here, relative to having a backup plan, how do you think about that?
Yeah, I think it goes back to some of the things we were talking about earlier, which is, really starting to think about these things ahead of any uncertainty. And I know for us, we've worked with a lot of businesses on just kind of helping provide a holistic solution, whether it includes UFO and other options that you have, in your network, which is a lot of times the case. I mean, we obviously can use our network to provide many options, but it has to be tailored to what you need. Everybody needs a backup plan and understand where they're going to turn. I do think that's one of the things many businesses during our time will learn. I mean, I grew up listening to my grandparents around the Great Depression and all the things they faced. And there were so many lessons that they learned from that time period and how they manage money. And that never left them. And I think what we'll see from this point forward is many businesses thinking a lot more, being more intentional about having a backup plan that they can turn to in times of uncertainty.
Makes sense. And we have had a couple more questions come through in the chat. One of them is around a topic we spoke a little bit about earlier, but maybe you guys can shed some more light on it. So what are the specific elements of having an operationally sound plan? What does that mean? What do you guys think about? Maybe Casey, I think you brought it up first.
Yeah, I mean, I do, and it goes back to, I think cash conversion cycle, as I mentioned earlier, I do think it is about understanding what liquidity levers you're going to use, and having those plans for that. Sometimes we have discussions with businesses that are in jeopardy of not making payroll, right? And that's something we take very seriously, and we look for options for those businesses. Ideally, you would have some things in place to be able to keep some fresh powder dry in case that's needed. So I think having all of those things in place will help you as you go to talk to banks or other sources of liquidity if you're very solid in your operational plan around cash conversion cycle and how you run the business?
Yeah. So what 2020 has probably taught a lot of people is, or what a lot of people have visited is probably vulnerability. And what I mean by that is don't be afraid to say you don't have an answer. Like, do exactly what we've been talking about this whole time is networking, ask for help, ask for advice. I mean, that is the beauty of relationships, is it allows you to think, not think outside the box, but hear other people's opinions and views, like what's worked for them, what hasn't worked for them. Like that's an important part of business, is building relationships that better you and your team.
One of the other things, maybe someone who's a little bit less familiar with us, asking about how some of our offerings differ from factoring. Jay, maybe you're the best person to address that on this one.
Yeah, I mean, so if you're talking about our initial product, which is the early pay, it differs in the sense that it's a debt-free tool, and you also don't have to sell any of your receivables. Like, that's the beauty of C2FO, is you invoice your client and you have an opportunity to get paid early by controlling the offer or the discount that you give to them. But that also goes along the lines of us absolutely being able to do some factoring, as well as what I spoke of earlier is lending, traditionally through an asset-based facility. What I would say about factoring is that, conceptually it's a great option to have and something that a lot of people depend on and rely on. But again, it always goes down to who you're doing it with. Like, be careful, talk to them, look
Right.
at your fees, everything like that. That's very important, and something that I go over with, the small business owners that I know, including my father, because we know historically that a lot of people are great operators, great entrepreneurs, but they just need help on the finance side. So I hope that answers your question, but it gives you a little bit of a difference in terms of factoring in C2FO, and then factoring good and factoring bad.
Yeah, and I'll just jump in as well to add to that. So I mentioned earlier in the call, finding those sources of funding that don't require you to sign your life away. And, to Jay's point, it really depends on the factor that you're working with, right? But what we've seen a lot as we interact with suppliers who are factoring or have factored in the past is it's a lot of strings attached. It's very hard to unwind, and it's very involved. And typically, you end up getting pigeonholed. And so just to reiterate Jay's point, read your contract, know what it says, get input on the price and what it's really costing you, right? Peel back the layers and understand what it's really costing. But Jay already mentioned this, but we're debt free, right? Your payment's coming specifically from your customer with our early pay product. There's no UCC, there's no underwriting, it's debt free. So it's vastly different.
And maybe the last question before we kind of close out here. MB, WB businesses have been around for years. This designation has been around for years. Why do you guys think there's such a large focus on helping out these businesses right now?
Obviously there's a lot that's happened, particularly with two minorities in our country. And I think more recently, I think people have started to understand that there is a disparity and something that everybody needs to do something about. I know for our company, we've been very intentional about ways in which we plan to help, but it just can't be a short-term focus. It's not something that, we plan on, sitting, just putting something out in the media and not taking action on. I mean, and I think that's important for everyone, is really to focus in on the things that we can do to set up the right environment to allow these businesses to succeed. And I think it's not something that happens overnight. I think it's got to be a long-term plan.
Yeah, definitely. I mean, the focus, it's one word, is equality, representation in the business industry, in the business world, and opportunity. I mean, everyone deserves it. So there's nothing else to really say other than that from my side.
Yeah, I think one of the things that we're really focused on being very intentional about in this next year is working with the large enterprise customers that we work with to set up specific funds and set up specific markets tailored to these communities to make sure we are, if anything, over serving them, to try and somewhat balance out what they experience in the marketplace. So.
Yeah.
Awesome. Well, I think we've addressed all the questions that came in, so we'll wrap up for today, but keep an eye out for more sessions like this from C2FO in 2021. We wish all of you a happy holiday season, and thank you for spending a little bit of your day with us.
Yeah. Thank you, Alex.
Thanks, everybody.